Based in California, United States, Silicon Valley Bank, SVB, was the 16th largest bank in the U.S. before it collapsed on Friday, March 10, 2023, making it the second largest bank to fail in the American financial history. In 2008, the American financial crisis caused by the failure of the housing market also caused the world to plunge into economic recession, and Washington Mutual Bank, which was the bank that provided the largest deposit savings and loan service in the U.S. at the time, with assets worth $309 billion, collapsed. In 2023, SVB, which has been operating since 1983 with operations focused on the technology startup ecosystem as the bank of choice for technology leading companies, experienced a situation where billions of dollars of money belonging to account owners could not be withdrawn after the bank ran out of money. Among the affected businesses are the owner of the online game platform, Roblox, with $3 billion in deposits, and the TV streaming company, Roku, which has $487 million in deposits in SVB. What happened was a bank run situation, which is a large-scale withdrawal of money by customers after receiving information about the problems faced by the bank. So, in this video, we will see how a large bank in the US like the SVB collapsed in a short time. Keep watching. Silicon Valley Bank, SVB, is not just a bank. In fact, it is the main arterial channel to provide financial and capital round for most startup companies within the technology sector. SVB was founded in 1983 and is based in Santa Clara, California. In the 1980s and 1990s, SVB generated handsome profits from its customers due to the rapid growth of the technology industry, and by 2011, SVB managed to open many branches in the country and abroad. Before it collapsed, SVB had branches in the UK, China, Denmark, Germany, India, Israel, and Sweden. It is the 16th largest bank in the US, and like other commercial banks, SVB provides services such as deposit savings, payments, investments, asset management, and more. As the name suggests, SVB is the bank of choice for more than 1,550 companies, the majority of which are technology-based in the business hub of Silicon Valley. At the end of 2021, customer money deposits at SVB amounted to $189.2 billion from $102 billion in 2020 and $48 billion in 2018. SVB's share price had also increased about 3 times from 2018 to 2021. This was due to the rapid development in the digital world and the high demand for technology products and services at that time. In fact, when the COVID-19 pandemic hit, even though many sectors were affected, the technology world continued to innovate and gain demand. In the fourth quarter report of 2022, SVB stated that it had assets of $209 billion and deposit savings of $175.4 billion. However, SVB's operation is quite different from the financial industry standard because it focuses on customers from only one sector, namely technology. And this is also one of the factors that SVB faces problems because there is lack of diversity of customers. SVB has customers from a pool of entrepreneurs who are just starting their businesses to successful global companies such as Uber and Airbnb. Not all banks are willing to accept clients from startup companies because the position is still not strong, and most banks require about 5 to 10-year financial record of the company to get loan financing. But SVB is in good relationship with entrepreneurs and is willing to help them. In fact, almost half of the companies in the technology and healthcare sectors listed on the U.S. stock market in 2022 deal with SVB. How banks make profits. The banking institution itself is a business, and it always needs to make a profit. The system used by banks around the world in today's modern economy is fractional reserves banking, which sets the bank to maintain only a certain amount of money in the depositor's account, while the rest of the customer's money is used to lend to other customers or to invest. The interest rate from loans and investments is what will generate the bank's profit many times more than from the customer's savings. For example, the central bank system of the U.S. Federal Reserve stipulates that banks in America keep 10% of the customer's money. Therefore, if a customer puts $1,000 into an account at the bank, $900 is used for loan financing to other customers or investment. Banks also encourage depositors to add money to various types of savings accounts by giving certain interest rates to prevent customers from using the money to make high-risk investments outside. The concept of fractional reserve banking is also used, knowing that not all account owners want to withdraw all the money from the bank at the same time. And in the event of large withdrawals from a few customers, the bank still has access to enough money from other depositor accounts to use. The advantage of this system is to enable banks to contribute to economic growth by being an intermediary medium to lend money to many customers to grow their respective businesses. However, the weakness of fractional reserve banking is that when all customers want to withdraw their deposits at the same time, or in other words, a bank-run situation occurs, then the bank cannot meet the demands of all customers if it fails to obtain sufficient funds quickly. This is what has happened to SVB, with total withdrawals made reaching $42 billion on March 9, 2023, causing the bank to run out of money and leaving a negative balance of $958 million. The next day, SVB completely collapsed and was taken over by the authorities. The news of this huge bank collapse caused massive panic until the banking market in the US lost about $50 billion within a few days. How bank run happens. Depositors in SVB are mostly business owners in the technology sector. Therefore, they have savings worth hundreds of thousands or millions of dollars, compared to the usual owners of personal accounts in other banks. 90% of account holders at SVB have savings of over $250,000, which is the amount of savings guaranteed by the US government in the event the bank faces a crisis and needs to stop operations. Unfortunately, the collapse of SVB happened very quickly. It started on March 8, 2023, when the bank announced in its quarterly investor letter to raise $2.25 billion in capital funds to cover a loss of $1.8 billion after selling investment assets that are government bonds. Investors took the news as a sign that the bank was in financial trouble and did not have enough money. Investors quickly sold shares, which caused the shares representing SVB traded on the market to plunge by 60% the next day. Within 24 hours, the loss of SVB company stock amounted to more than $161 billion. Receiving information about the bank's stock plummeting, account holders at SVB withdrew their deposits en masse. The bank tried to control the situation by asking customers not to panic. But on March 9th, there was a bank-run situation where customers withdrew as much as $42 billion of money from their accounts, and the bank could not find enough funds to accommodate the massive withdrawals. On March 10th, SVB's stock trading activity was stopped, and the U.S. government, through the Federal Deposit Insurance Corporation, FDIC, took over SVB, fearing that what happened to the bank could have negative effects on the financial system. The FDIC released as much as $40 billion from the Treasury General account to manage the SVB problem, which is a large amount compared to the previous withdrawals. The FDIC assures that customers with savings below $250,000 will be able to withdraw money on March 13th, and all SVB assets will be liquidated to clear the remaining debt. The news about SVB being taken over by the FDIC also caused other banks to be affected by the value of banking stocks, also dropping by more than 20%. So, in less than 40 hours, SVB, as a banking institution for 40 years, has collapsed, leaving a negative balance of $958 million. Why did SVB suffer losses? SVB has a limited investment portfolio with only 40% of the money used for loan financing, and the other 60% is invested in buying long-term U.S. Treasury bonds to profit from annual interest rates. Government bonds are securities assets issued by the government to cover government debt. In other words, investors will lend to the government, and investors collect profits from the annual interest rate as set at the beginning of the purchase. Government bonds have minimal risk with relatively low interest rates, and long-term bonds have maturities of 10 to 30 years. After the maturity date, the investor will get back the amount of money lent to the government during the purchase of the bond. After the 2008 financial crisis, Among the new rules set by the U.S. government was for financial firms to reduce high-risk investments and encourage investment through the purchase of government bonds. However, the current economic situation has changed a lot, with inflationary pressures forcing interest rate hikes by the central banks, causing the government's long-term bond investments to depreciate and banks to incur losses. Normally, commercial banks generate a lot of profit by charging interest rates on various types of loans offered to customers, and this is not done by SVB. The limited investment portfolio owned by SVB, which is focused on government bonds, is one of the reasons why the bank is short of funds and must sell the bonds at a cheaper price and earlier than the maturity date. In the case of SVB, most of the investment, which is worth billions of dollars, is used to buy government bonds that have long maturities. The bond's value shrinks because in 2022, the U.S. Central Bank begins to aggressively raise loan interest rates to overcome inflation, which causes SVB to not be able to obtain enough annual profit interest from the bonds. SVB acted to sell part of the government bonds to the investment bank Goldman Sachs at a price of $21.45 billion compared to the original price of $23.97 billion with a loss of $1.8 billion. Furthermore, ever since the COVID pandemic, most businesses in the technology sector have also experienced downsizing operations, including layoffs, causing deposit savings in SVB to decrease. As a result of the losses experienced and the dwindling funds, the bank could not cover the withdrawal of customers' deposit money, which was done simultaneously in large amounts. In conclusion, many systems that are used today, including financial and banking institutions, can only run smoothly when things remain normal. But if there is a panic with the rapid spread of information, then the system will collapse overnight, as happened at Silicon Valley Bank, in less than 40 hours. A bank-run situation on March 9, 2023 had caused up to $42 billion of money to be withdrawn. Today dates 14 years after the financial crisis of 2008, and bank users would still ask themselves, are bank deposits really safe? This shows the fragility of the modern economic system used around the world today. Thank you for watching.